man, to a huge day for Bitcoin, hovering hundreds of dollars away from a critical weekly close. We are 11 hours from this weekly close, and if we lose this certain level, this will not look good for Bitcoin for the coming weeks and months. I'm going to show you that key level. We're also going to look at the different timeframes on Bitcoin and watch out for the next catalyst that you need to be watching out for this week. We have some huge macroeconomic data which will move the market this week and will dictate which path Bitcoin and crypto markets will take over the next few weeks. Make sure you smash the like buttons. Don't forget to subscribe if you appreciate these timely updates. Let me know in the comments and support this community. As you can see, guys, this is the weekly close. We have been talking about that blue colored moving average is your 200 moving average. And as we know, this has been critical support going back in history for Bitcoin. This, on this specific candle here, was the first time we broke below it. We spent 1, 2, 3, 4, 5 weeks below it before the 6 weekly candle last week with the hopium broke us back above, which was fantastic. Remember, the longer you spend below here, the more worrying it becomes that it will act like resistance. If you stay too long below a moving average, you can turn it into resistance versus support, which is what it has been for the whole history of Bitcoin. So last week, that hopium was really good. But what we've seen today, this week, is a red candle. And we are now 11 hours away from this critical close. And if we close below that moving average, and that moving average sits at 22,875, we would have just got rejected by our 200-week moving average, and this is not good for what it could set up thereafter, okay? So it's critical that we get this close above it, and we're just too close for comfort right now. No doubt there'll be a bunch of manipulation leading up to the close in 11 hours, and this could be quite worrying if we close below this. So I do want to see the bulls come in and just defend this level, and then let's regroup for next week to try have a big green week. Now, speaking of next week, a whole bunch of critical catalysts. On Wednesday, August the 10th at 8:30 a.m. Eastern Time, we will receive our CPI reading for July, okay? That's July CPI's reading. Now, why is this important? Of course we know this is important because this is why the whole macroeconomy is risk off right now. This all started because of uncontrollable inflation after the printing of money, right? So Jerome Powell has been expeditiously increasing the interest rates. He's done 0.5%, then 0.75, 0.75 again, and now the market is trying to figure out what is he going to do next. And if we go into the Fed rate monitor tool, you can see that initially the market had just priced in 50 basis points, right? After last week, you saw the market really start to rally because the market was like, hang on, that might be the last 75 basis point rate hike we see. But then we saw this rotate, okay? We saw this flip round, and now you can see that the market has now pivoted across to pricing in 50% of people are now pricing in 75 basis points again in order to bring inflation under control. This update came after the jobs figure on Friday, which we covered off on Friday. Remember, the labor market is still hotter than expected. We wanted that number to come in that Goldilocks period, but it wasn't. Wages are still rising, jobs are still being created, and therefore Jerome Powell needs to be more aggressive with his interest rates, which is why people are now pricing back in 75 basis points. And again, if that CPI reading comes out higher than expected, remember we got 9.1% CPI year on year in June, and the expectation for July is 8.7%. Okay, that's the expectation for this month. So we want to see that inflect down. Okay, if I show you this on a line chart, just to give you an idea, we want to see this tick down, just tick down here to 8.7, so we can say, okay, Jerome Powell, what you're doing is working. At the moment, there's no evidence for that. We have this slight tick down here in the April reading, but since the rate hikes, it's just been climbing, and inflation is not under control, and therefore markets cannot reliably start to rally until that, okay? So don't be surprised once we get that. Depending on that reading, we could see a bunch of red if it's 9.1%, or if it's even higher, I'd expect a lot of red if it's 9.2, 9.3, 9.4. That would be horrible. And expect this to pick up, right? So more people, if the inflation comes in hot, more people will price in a 75 basis point rate hike. If inflation does come down, if we do see inflation at 8.7, 8.6, 8.5 CPI reading on Wednesday, then we can see this go the other way. The markets can rally, and this 50% of people who have priced in 75 basis points can unwind that and start pricing in 50 basis points, because already what Jerome Powell is doing is working, okay? So that's what we're looking at here on crypto. Fear and greed index is sitting at 30. Again, like I said, the market is in this kind of limbo period. It's not super fearful. It's not super excited for a rally. It's just waiting for a little bit of direction. And if you link that back to the charts, it's coming back to this very same point which we've been covering off, which is that critical level at 24, right? So if I head over to the 4-hourly chart, you can see we got rejected at 24K, rejected at 24K again, and now we're going to fight that 24 level again right here. Okay, so if I just bring that into screen so you can see, whoops, let's zoom out there. Right, so what you can see, nice upward trend. We're trying to form the next bottom, right? But if you look at the previous bottoms, look how sharply it bounced, and you had a big move with a higher high, big move with a higher high. And here, we're not quite getting that, right? We've been here for a little while now, which is just getting people worried that this might be a hang before a fall back down. Remember, you've got support coming in at 22 and this diagonal support line. So it's perfectly fine if Bitcoin wants to do this. That'll still be a nice upward trend. That's not an issue. Where things start to become an issue is if we lose 22K, okay? Because then we can start entering back into this channel and things can get a little bit worse if we enter back in the channel. Remember, we worked so hard to get out of this channel find. It wouldn't be great if we get thrown back in. If I bring out the 4-hourly EMA, you can see again, the market is very undecided, right? We're flipping that 4-hourly positive and then negative, and we can't get any real momentum above our 4-hourly EMA ribbon. On the daily EMA ribbon, what you'll notice, however, is we're trying to get that bounce again, right? You might see this candle here a couple of days ago. That really did bounce right from the bottom of our EMA ribbon. We were going to close below it, and then we would flip bearish again. But now we're seeing that bounce. And again, we just need that volume to come in. Maybe tomorrow, I don't expect that today here on a Sunday, but maybe tomorrow push us above and give us that strong green candle to say, okay, we're going to go post a higher high now above 24,700. That's what you need to see on Bitcoin. Because otherwise, the longer you spend here, the more likely you are to break back down into that channel, which won't be fun here for Bitcoin. Also, looking at the 4-hourly pattern, which I shared with you guys yesterday, you can see Bitcoin's producing these multiple continuation patterns. In fact, we can look at it on the 4-hourly. It'll be a little bit easier. Here you go. Multiple continuation patterns, right? So we consolidate, we break out, just about post a higher high, consolidate, break out, just about post a higher high, and we repeat. So are we doing the same here? You can see now where we are literally right now. You can see we're trying to get that retest. So if I just show you what's going on here, you've got the breakout of trend, and now what you can see is you almost got this retest, but again, it needs to go and post that higher high and push on past 24K in order for this to play out, okay? So key levels here for Bitcoin, loads going on, big week here in the macro economy, CPI reading. Not to forget, on Friday, you also get your Michigan sentiment survey as well. Really important figure to see what are consumers pricing into the market. Do consumers believe we're in an inflation? Do they believe we're in this recessionary type environment? Because if their expectations of inflation are high, consumers delay purchases, reduces demands, and it affects businesses and then becomes a self-fulfilling prophecy, okay, which can drive us into a recession. So Jerome Powell will be looking at the CPI reading on Wednesday, and he will no doubt be looking at the Michigan sentiment survey on Friday. Big week ahead. The next 11 hours, we need that weekly candle close above that 200-week moving average, and we need Bitcoin over this week, really. I think we've got to set this deadline of this week to say Bitcoin needs to get above that 24,000 level. Otherwise, you're going to start losing steam here on Bitcoin, and it's more likely than not we're going to enter back into that channel between 22 and 18,500, which is not going to be fun here with more sideways action. If you guys are trading, plenty of opportunities to trade in the market. It's just a bit more frustrating for those with long-term portfolios, but in terms of trading, you're getting a lot of range-bound movements, high volatility, big events like CPI and Michigan sentiment survey on Friday. So feel free to trade that with a small part of your portfolio if you're experienced, and of course you guys don't need me to tell you what to do. Links in the description to BYBIT and BitGet. Do check them out. They do support the channel. Thanks for watching, guys. Go watch my breakdown of Polkadot versus Cosmos. Did a really thorough dive into Polkadot versus Cosmos in the battle for the layer 0 space. I'm going to link that up here, and I'll see you in the next one.